The future is unpredictable, and financial emergencies can crop up anytime. Saving money allows you to create a safety net for your future expenses, as well as unplanned financial needs. The more you save, the more peace of mind you have, as you are better prepared for anything life throws at you. On this video, I am sharing with you 19 habits of people who are great at saving money. Number 1. Good savers starts now. Good savers start early, say Janet Stanzak and Kristen Garrett, certified financial planners who started their firm Financial Empowerment as a way to help people kick bad money habits and develop better ones. Many good money savers were taught as children to sock away for a rainy day. But even those who weren't have learned to jump on an opportunity as soon as they see they have an option, like a retirement savings plan through work. They take it, Garrett says. Good savers don't procrastinate financial decisions. Number 2. Good savers have a retirement account. It's not new advice, but there's a reason every financial advisor repeats it. Because this is your future we're talking about. A good rule of thumb is to put between 10 and 15% of your paycheck each month straight into a retirement account. Number 3. Good savers know the difference between wants and needs. One of the biggest lies we're sold today, Stanzak says, is that wants are actually needs. I've had so many clients try and tell me that travel, new clothing, and eating out are real needs, she says. They're really not. Instead, good savers actually write down a list of their basic needs, their wants, and their big wishes. Number 4. Good savers don't rely on Autopay. Autopay makes banking easier. In fact, it makes it too easy for money to flow in and out without you really registering what's happening, Garrett says. Whether it's writing out a physical check or filling out the form online, intentionally paying your bills makes your brain note the expenditure. If you do set up Autopay, no late fees after all, make sure you don't just set it and forget it. Check the transactions at least once a month to make sure the charges are accurate and get a good sense of what you're spending. By the way, these are the bills you shouldn't put on Autopay. Even better, Garrett adds, good savers write all those transactions down in their budget. Number 5. Good savers have a budget. Yes, a real honest-to-goodness written chart or spreadsheet that they update and balance regularly is one of the trademark money-saving tips from savvy savers. The first clue you have that someone has a problem with money is when they can't provide their monthly cash flow, Stanzak says. You can't save if you don't even know how much money you have to begin with. Number 6. Good savers use cash or checks. This isn't a hard and fast rule, Stanzak says, but good savers often tend to use physical types of money. Research shows that people can spend more money with credit cards versus paying with cash. Statistics show that the average cash transaction is $22, whereas the average non-cash transaction is $112. If you're trying to save, handing someone a wad of cash or writing out a check provides enough of a mental speed bump to slow down many impulse buys. Number 7. Good savers prioritize saving. It sounds simple, but one of the best money-saving tips is simply making saving a priority in their lives, says Andrea Warwick, a consumer finance expert. Before spending on anything else, they pay themselves first by putting savings into a retirement account or other self-directed savings account, she says. Make sure you avoid these retirement budget mistakes so you can have a stress-free retirement. Number 8. Good savers keep track of the little things. What's a latte here? Or a 99-cent app there? Little things can add up to big expenses quickly, Garrett says, often before you even realize what's happening. Good savers will write down, in their check ledger or budget, all their expenses, even the tiniest ones. Doing this can also help you track down hidden fees you had no idea you were paying. Number 9. Good savers look for deals. Being frugal is a big part of saving money, and good savers are not too proud to get coupons, hunt down the best deal, or research all possible options before buying. Good savers think through each purchase and research alternatives like used options, compare competitor prices, look for coupons, and read reviews in detail to make the best buying decision, Warroch says. Number 10. Good savers adjust for life changes. You'd be amazed at how many people get divorced but keep living their married lifestyle, Stanzak says. Big life changes, like job layoffs, divorces, and illness, inevitably affect our budgets. Good savers amend their spending to reflect their new earning or income status, regardless of how painful it is to acknowledge. If your bills are getting too expensive due to an income change, check out the household bills you can negotiate. You can save money on everyday expenses. Number 11. Good savers take free money. Does your employer give you a discount on your insurance for getting a checkup every year? Does your company have employee stock options or offer to match your retirement savings? Do you have flight miles or hotel points accrued that you're not using? Many people leave this so-called free money on the table, Warroch says. It may take a little extra effort to fill out the paperwork, but it's worth the time. Number 12. Good savers have 3 to 6 months of expenses saved. Here's your scary stat for the day. About 56% of Americans live paycheck to paycheck, which means millions of us are just one bad car accident or layoff away from financial ruin. It may sound obvious, but good savers save. How much savings you need depends entirely on your lifestyle. But Garrett and Stanzak recommend having enough money to cover at least 3 to 6 months of basic expenses like mortgage, insurance, utilities, and food. Number 13. Good savers are honest with themselves. None of us are getting any younger, that's for sure. Yet so many people live in denial of this fact, Stanzak says. The truth is that each of us has risk factors that could affect financial security. Good savers are honest about their particular risks: advancing age, tenuous job security, chronic health problems, family issues, etc., and plan their savings to account for them. Number 14. Good savers do not feel entitled. Too many people have this attitude of entitlement, Stanzak says. They get caught up in, "I work hard, so I should have this because I earned it." But if you can't afford a nice car or a day at the spa, you shouldn't buy it, no matter how hard you work or how strongly you feel you deserve it. Number 15. Good savers use online savings accounts and credit unions. Online savings accounts generally offer a better interest rate than traditional brick-and-mortar banks, Warroch says. Good savers also shop around to ensure they don't get charged bank fees and may use a credit union instead. Learn when you shouldn't use your credit card for payment. Number 16. Good savers make saving easy and automatic. Remember how automatic bill pay allowed you to forget the pain of paying your bills? Well, it works the other way too. Automating your savings account, either through an automatic transfer on a certain day each month or through using one of the savings apps like Digit, can take the sting out of savings, Stanzak says. Number 17. Good savers live below their means. Just because you have money to spend doesn't mean you should spend it. Good savers know that living below their means can help them save more for the future. For instance, just because you can afford a new car doesn't necessarily mean you should get one. If your car is in good shape, use it for as long as you can. Another way to live below your means is to downsize your home. Think about it. Do you really need all the space in your home? Or could you afford a smaller and less expensive place? Downsizing and getting a more affordable home can free up some cash flow each month. Number 18. Good savers know when it's time to pick up a side gig. Good savers are brutally honest about their income. They know how much they can afford to put away each month, and if they need to make more money to reach their savings goals. If need be, they pick up side gigs to help them meet their goals. Who knows, your side gig could turn into a full-time career. Number 19. Good savers start small. It can be easy to read lists of money-saving tips like this and feel completely overwhelmed and throw in the towel. But saving doesn't have to be a huge change, Warwick says. If you're new to saving, start small. It's easier to adapt to a small change than a complete life overhaul, she explains. So begin by automating a small amount each week, and when you become accustomed to saving that amount and living off what you have left, increase it by a little. You'll continue creating a better savings habit each time. Thank you for watching, and I hope you learned something from this video and start planning for your financial future. Have a good day.